What is up, ADG traders? This is Munya and welcome back to my trading channel. So today we're going to take a look into the important candlesticks. I know I did a video on that, but this is the part 2 of it. So if you haven't watched the previous one, go check it out. It's here on my channel, right? So the three candlesticks that were left, we had the Dragonfly, Doji, and the Gravestone Doji, and then the Harami pattern, right? So before we start, kindly click the subscribe button, turn on notification bell so that you're notified each and every time I post a video. And I just want to say congratulations to Holy 10 for launching the album. My country people, you should be knowing this by now. So if you're a Holy 10 fan, click the like button and let's support the movement. And as usual, take a screenshot of you watching this video, repost it on your Instagram stories, and tag me and stand a chance to win VIP access tomorrow, Sunday. I'm picking the winner on my Instagram. So make sure you're following me there. The link is down below. You can also join our Telegram channel where I post updates on what's happening. A lot of you have been asking me about the previous indicator and where to get it. I posted that information on my Telegram. So if you're not in the Telegram, you won't have full updates. Of course, some of the things I'll forget to mention on this video, but you'll get to find them in the Telegram channel because it's just easy to just type and post and update you guys on what's happening at ATG. Nevertheless, let's jump into today's video. So I'm going to explain these three candlestick patterns, and we're also going to take a look at the charts and see how they are performing and how we can use them in trading, right? So I'm going to start off with the Dragonfly, which is a very simple candlestick pattern, I'm going to start off with this structure. So number one, we're going to talk about the Dragonfly, right? I'm going to talk about the Dragonfly, and the Dragonfly has a simple structure like this, right? This is what is called a Dragonfly. It looks like a T, but it's not. It's just a candlestick. It's just a bullish candlestick. A bullish candlestick formed when the open and the close price are of the same size or almost the same size. So here is where we have our open and close price, right? But here is where it gets different from the rest. It has a long lower wick. So this is a wick that we have down here. A wick. Some call it a shadow, right? And then here we have the open and close price. Forgive my handwriting, guys. We have the open and close price right there. So how is it of importance and how can it help me in my trading journey? That will probably be the question that you have, right? So this candlestick pattern or this candlestick formation occurs in a downtrend, right? Remember in the previous video I talked about this market structure, and I said how can you identify the different market structures that we have. If you haven't seen the video, just go check it out, right? So it forms in a downtrend, right? And it just signifies a bullish reversal. So we're in a downtrend like this, right? This downtrend, and then you see this type of candlestick. Expect the market to start going up. Why do we say so? We have this long wick here. This long wick here indicates that there is a resistance of the buyers and their attempt to push the market up, right? So this long wick here represents the buyers trying to push the market up. Initially, the sellers were pushing the market down because we're in a downtrend, but then this resistance, this clear resistance, that's why we say it has a long lower wick. There's a clear resistance that the market, the buyers in the market are now taking over, right? So expect this and on a downtrend, but do not use this type of formation alone. Remember, you cannot use candlestick pattern formation on its own. You need something like market resistance, support resistance. You need something like price action to help you in your trading journey, knowing the market structure already, right? So let's switch on to the charts and see where we find this type of candlestick. So I've already highlighted some of the areas where you would find that type of candlestick pattern. and I'm just gonna share them with you right now. Let's see what we have here. I'm just gonna share them with you right now. So remember, candlestick pattern formation can occur in any time frame, right? So right here we have our candlestick, the candlestick that we are looking for, which is this one, and we said it occurs at the bottom of a downtrend. At the bottom of a downtrend, as you can see, we have our high here, and obviously we're starting to go down to the low, and we start to see this candlestick, which I said initiates that buyers are now kicking in the market. And as you can see, the market started to go up and up and up. We had a series of those candlesticks as we were going up, indicating that buyers are still kicking in the market, right? So initially we're coming from the top, going down, and then at this base level, which I'll call our bottom, we had the Dragonfly doji, and then the market started to go up. So can you see that if you don't understand that we should be in a downtrend, if you don't understand the market structure, knowing when you are in a downtrend or in an uptrend, you won't be able to trade this doji. You just think it's just another candlestick and you will leave it to pass, right? Let's go back to our chart, our drawing board, and talk about the next candlestick that I have here, which is the gravy stone doji. So the gravy stone doji is simply the opposite of the dragonfly doji. And what I mean is, number two is we have a candlestick pattern like this, or a candlestick formation like this. Can you see the difference within the doji? The doji is simply this, but then the dragonfly is now something like this. Okay, so basically it's a bearish version of the dragonfly doji, and it has a long upper wick, meaning that the sellers are now driving the market down, and basically we'd expect this to happen at the top of an uptrend. So initially we'll be going in an uptrend like this, and the moment we see our gravy stone, we now know that the market is about to plummet, right? So this basically shows that the bullish momentum is over, and then the sellers are now simply kicking in the market. Let's go to our charts and see where that occurred and where we can actually use it. So I have one highlighted here. And can you see that the moment this candlestick formed, we had a series of bearish candlesticks following, right? We had a series of bearish candlesticks following. Why? Because the bullish momentum was over. So the moment you see this kind of candlestick being formed, just know that the bullish momentum is over. And as you can see, we then had a series of bearish candlesticks following, right? This is about 4 hours of the market going in a downtrend. Let me check the number of pips that was. We had 40 pips, basically 35 pips to be exact, 35 pips going in the negative direction, right? Okay, that's all for the gravy stone. You can also research on your own and see what happens with it. And then lastly, we're going to talk about the haramic pattern, right? Then the haramic pattern, haramic means pregnant in Japanese. Remember, these candlesticks are called the Japanese candlesticks, and haramic means pregnant in Japanese. Harami means pregnant in Japanese. So basically, we're looking for a candlestick structure like this. We're looking for something that looks pregnant, basically. We're looking for something that looks pregnant, basically. Okay, so it has two formations, or it has two patterns. We have something like this, and we have this. So this is a bearish candlestick, and this one, this side is the bearish candlestick that we have right here. Okay, so this is the bullish inside bar, and then this is the bearish inside bar. What it basically means is these candlesticks consist as two. We have the larger one at the beginning, and then the smaller one, which is called the baby. This is the mother, and then this is the baby. Both candlesticks signify indecision in the market, right? Basically, they're similar to the doji, but this time it is a candlestick pattern rather than just a candlestick, right? So they can be used in different ways, and if they happen in an uptrend or in a downtrend, we consider that as a continuation in the market. But if they happen at the top of an uptrend, one of these at the top of an uptrend or at the bottom of a downtrend, we now have a signal for a reversal. What do I mean by that? Let's go to the charts. Basically, I have one nice bullish inside or bearish inside candlestick here, which is this one with our big bullish candlestick, and then we have our small bearish inside candlestick. So this is called the bearish inside bar, right? And it happened right at the top of our market. So this signifies a reversal in the market, and as you can see, the market turned down. This is why I said you can't use candlestick pattern alone without knowing market structure, without knowing price action, without knowing how to do all those stuff, right? But as you can see, it happened right at the peak here of our market, and then once we see it happening, right, let's say on our support zone or our resistance zone, we know that it's a reversal. But if it happens within our market, it's called a continuation pattern. For example, at this point where the bearish inside bar, which is this with the big bullish candlestick and the small red candlestick right here, but this is within, we are not at any important market structure or at any important price level. So can you see that you would add more positions once you reach this point, because you know the market is going to continue in that uptrend, rather than at this point you know that the market is going to reverse because we are at a resistance level and we have this pattern being formed. So the Harami pattern has two signals, either a continuation pattern or a reversal pattern, right? So that's all. Okay, we had another bearish with another bullish inside bar right here, but we are not at any important market position or price, and you can see that it continued in that downtrend. So it add more positions for a sell here because of this Harami pattern, which is the bullish inside bar, because this time we started with the red and then ended with the green. So that's all for today. Until next time.